It's Monday, December 12th, 2022. A lot to talk about today. I'm going to get right into this video. Before I do, I want to just acknowledge somebody that wrote me last night in the comments. And this individual said that, well, if we have a dollar collapse, don't worry because you won't have to pay any of your debts back. Almost like it's a good thing. If we have a dollar crash, a currency collapse in America, don't worry, you won't be on the hook for your debts. That is completely 110% untrue. We could go back to the Weimar Republic, Venezuela. Look at what's happening in Lebanon right now. Look what happened in Argentina, Sri Lanka, Zambia, Belarus, and many other countries right now. I think there's about 12 countries currently that are under threat of a currency crash. And throughout history, anytime we've seen a currency collapse, and please correct me if I'm wrong, where did the people not ever have to pay their debts back? Where was this beneficial? Anywhere in history, when a currency collapsed, where was this beneficial to the consumer? I'm looking at what's happening in Lebanon right now, what's been happening over the last couple of years as their currency has gone through a massive crash. Hyperinflation. You look at Venezuela, hyperinflation. People now are taking gold and shaving grams off of a gold nugget in order to pay for food, to pay for a haircut, to pay for anything, because gold is worth something. Gold is real money. And as currencies continue to collapse, fiat paper currency, monopoly money continues to collapse, people are going to come to the realization that you need real things, real assets. So if anybody could please correct me and tell me where in history a currency collapse was beneficial to the consumer or the people of that country, please comment down below and let me know. CNBC, consumer inflation expected to have continued cooling in November, but still high. Earlier today, Dow Jones was floating around 200-300 points in the positive. Later in the afternoon, it skyrocketed, closed up 528 points, NASDAQ up 139 points. So does somebody know something about tomorrow? Does somebody have some insider information that caused these markets to skyrocket later in the day today? Consumer inflation could show signs of cooling tomorrow morning when we get the CPI. I think it's going to come out about 8:30. Economists expect, headline inflation rose 0.3% or 7.3% year over year in November. That is down from the annualized pace of 7.7%. So here it's saying that we could see an increase of 0.3%. That would put us up 7.3% year over year, but they're going to turn this around and make it into some kind of good news. Now, I think that if we get CPI in tomorrow at 6.9%, somewhere around there, 6.8, 6.9, maybe even 7, you're going to see markets probably go crazy and go way, way up, especially if we hit the 6s. But in all honesty, are you really seeing any decrease in inflation? I will say fuel prices have come down a bit, but they're way up from a year ago, 2 years ago, 3 years ago. But I just went to the grocery store a few days ago and I was blown away with the price increases. And every week, as you know, you go to the grocery store, you know, every week or every 2 weeks you go, prices are continuing to go up. The cost of living going up. I don't see much coming down. Yes, fuel prices have come down, but we have depleted our petroleum reserves in order to do it. And what price are we going to pay down the road for that? JP Morgan sees stocks exploding more than 10% on big CPI miss. This on the hedge, they're saying if it comes in at 6.9% or lower, you're going to see markets skyrocket. Comment down below, where is the CPI going to come in tomorrow? Is it going to be flat? Is it going to come in lower than expected, somewhere at like 6.9%? Or are we going to be sitting at 7.3, 7.2, 7.4? Let me know your thoughts. I can't even speculate anymore. And remember, this stuff is so manipulated. I don't believe any of it. Here's another one from CNBC. The Federal Reserve is about to hike interest rates one last time this year. And how will it affect you? Well, today, a 30-year fixed rate on a mortgage is sitting at 6.33%. this Wednesday, we're going to get a 50 basis point rate hike. That means mortgage rates will probably go up a bit. HELOCs. As the Fed's fund rate rises, the prime rate does as well. HELOCs adjust right away. So once that rate goes up, HELOCs are going to go up immediately. Right now, currently, the HELOC rate sitting at 7.3%. That's up from 4.24% earlier this year. Another thing that will be affected, so we've got mortgage rates will be affected, HELOCs will be affected, credit cards will be affected. Right now, most people are paying around 19% on an average APR on their credit card. That is going to go up. Your current card rate is probably going to go up as well. If you're getting a new card, rates are going up. So right now the average is 19%. These store cards are floating over 26%. So all this stuff is going to go up. Basically anything where you have to service debt is going to go up. Auto loans, student loans, it's all going to creep up. And it's amazing, in my humble opinion, how they've been able to pull mortgage rates down. We were over 7% not that long ago, sitting at 6.33% today. But I still have a feeling, a sneaky suspicion that the Fed is buying these 10-year bonds and really manipulating the bond market, which in return is very connected to mortgage rates. So I think the Fed is still in there buying, even though they're still shrinking their balance sheet, but they're not shrinking it enough. Wolfstreet.com, starting to be housing bust 2 for home builders and new single family houses. Home builders have very, very big trouble. I would hate to be in that business right now. And when you look at these home builder stocks year to date, they've been absolutely decimated. We have a ballooning inventory of new homes and a huge cancellation rate of signed contracts in real estate right now. So this is a bad combination where you have all this home inventory, people putting homes on the market, new home construction coming on the market, foreclosures, all this coming on the market. And you have mortgage rates sitting over 6%, and you have this huge cancellation rate taking place. A bad, bad combination. But we talked about this probably about a week or two ago. The cancellation rate right now, it is very bad. Southwest saw a 45% cancellation rate. Think about homes, 45% of the homes in the Southwest canceled. Northwest, 30%. Southern Cal, 24%. In the Southeast, 19%. In the Northeast, 11%. October inventory of all stages of construction jumped to 470,000. That is up. And that's up. That's October. That is up 21% year over year. But these cancellation rates, I don't think we've ever seen a time in the housing history where cancellation rates are up to 45%. It's unbelievable. I was watching the Megyn Kelly show the other day, and she had Peter Schiff on as a guest. And just a couple things that Peter Schiff said on that show that I think we all have to be in tune with. And I think most of us would agree, and this is why most of us are preparing. He says a lot of people are struggling in this economy. A bad situation has gotten worse, he says. Americans have blown through all of their stimulus money, and now they're pretty much broke. Credit card debt at all-time high. Americans are struggling to put food on the table. When we look at 70%, we just talked about this a day or two ago, 70% of Americans are struggling, having a hard time putting food on the table. 41% of small businesses last month could not pay their rent. Things are severely broken. Inflation is double the official number, Peter Schiff says. He says, I think the recession is going to get a lot worse. Yes, it is, Mr. Peter Schiff, because we are going to head into a full-blown depression. But just a few things that Peter had to say on the Megyn Kelly show. And look, Peter has been proven to be right yet again. A lot of people just say, well, broken clock is right twice a day. But, you know, when you have so much manipulation by the Fed, you know, we're talking $7 trillion of money printing being injected into the economy. We're talking about the Fed buying mortgage-backed securities. We're talking about a Fed keeping interest rates at nearly zero for a decade. This is why things haven't broken yet, and this is why people like Peter Schiff haven't been proven right yet, because of all of the manipulation that has taken place behind the scenes. Things that are so artificial, things that really, I think, are criminal and very reckless, and things that people never really predicted or thought could even be possible, we've witnessed take place. And without the Fed just juggling all of this, this thing would already been burnt to the ground. But it's going to burn to the ground no matter what. And it's going to be much worse now because of what the Fed did. Allowing interest rates to be at zero for nearly a decade, buying mortgage-backed securities, putting mortgage rates under 3%, pumping $7 trillion in 30 months in the economy. This is going to make things so much worse. It didn't have to be this bad. We should have just dealt with it in 2008. We would have went through a painful few years, but we would have recovered. We've been done with it. But now they have made things so much worse, and the pain is going to be incredible. It really is. Everybody is going to feel some amount of pain, and most are going to feel very severe pain. Another one from The Hedge: everything you need to know about the final stimulus checks in California. They're called MCTRs, Middle Class Tax Refunds. It's a nice name, isn't it? Well, recipients in California are going to receive anywhere from $200 to $1,050, even though we have a $24 billion budget problem, and we're running a huge deficit now in California. Singles earning between $75,000 and $125,000 are eligible. Couples earning between $150,000 to $250,000 can expect to receive one of these checks. They're saying here for about $250. Get this, in order to be eligible for this free money, you just have to be a California resident from 2020 for more than 6 months. 19 other states are jumping on board with this stimulus. And so this just leads me to the question, how in the world are we ever going to dissolve inflation? How is the Fed ever going to get back to this 2% number when we have 20 states now sending out stimulus checks? I don't understand. If somebody could please explain that to me, please comment down below. Let me know your thoughts on this. But we're running a huge deficit now in California. We have a $24 billion budget problem, and we are going to send all this money now to people throughout California. I don't get how this isn't going to cause more inflation. With 19 other states on top of California doing this, how is this not going to be inflationary? How is this not going to cause more inflation? How is this not going right back to the same problem that created this mess, giving people money? Look, I know people are suffering. I know they're having a hard time, but what in the world is $250 going to do to somebody earning $75,000 a year or $150,000 a year? What is $250 going to do? They have created so much chaos in California and throughout this country, with gas prices and energy prices and food prices soaring, rent, real estate, and it's all been manipulated. It's all been caused. We have a real estate bubble, a housing bubble caused by the Fed. We have massive inflation caused by the Fed. And now we all hope that some miracle is going to take place, that the people that caused this problem are going to be the same people that fixed this problem. Well, the same people that caused it are now sending out more stimulus money. So please comment down below. We got a big mess on our hands, and it's another reinforcement to all of you and to myself why we need to be detaching from the system, why we need to be getting out of the system the most that we can, getting out of these banks, getting out of the dollar, the best that we can, holding real money, holding our money outside of the system. Because the system can be shut down with the press of a button, and that's a really scary thought. But it's happened throughout the world. It's happening right now, and it's going to continue to happen. And if these banks get into big trouble, guess what? They're going to bail in with your money. They'll lock you out, and you are going to be in big, big trouble. So I'm not telling you to get all your money out of the bank. but I would only have enough in the bank to pay my bills, to run my business. I would not have much more than that. I would have it in other locations, safe locations, places that you can get to very, very quickly. And I think we're at a point now where we can't really be counting our wealth in dollars. We got to start thinking ounces. That's where the world is heading. When you look at what's happening with these BRICS nations, they're going to be looking at ounces, not dollars. They are going to be looking at real money, gold, silver. So as I leave you today, please comment down below. I just, when I see the market up over 500 points today, based on absolutely nothing, it's another scary sign. And it's another sign of just mass manipulation and the hope that the Fed is going to say something, the hope that the Fed is going to pivot, the hope that something is going to turn all this around. We are too far gone, ladies and gentlemen. We are not going back to normal. We're not going back to a thriving economy. We don't make anything here. We don't produce. We don't manufacture. No, we're going to continue to give people free money and promise people that they're not going to have to pay their debts back. And just like this gentleman said in the comments yesterday that, well, you know, if the dollar collapses, that'll be great because you won't have to pay your debts back. You'll just have a free house and free car. These people are delusional who think like this. If we have a dollar collapse, it's going to be your worst nightmare. So please make sure you're protecting yourself with real assets, get your debts paid off, own some gold, own some silver, because that's where the world is going. America pulled the world off the gold standard. The world is going to pull America back onto the gold standard, whether it likes it or not. So people can, they can speculate and they can gamble with all the cryptos that they want. Central banks around the world, the BRICS nations, they're buying gold. So I would prepare, ladies and gentlemen, I would prepare. If you hear anything, that's Nugget taking her little nap. In fact, I'm going to grab her really quick. A lot of you have been asking where she's at, so I'll let her say hi really quick. There's Nugget. So I'm going to leave it there today. God bless all of you. Please make sure to give the video a thumbs up. Make sure you subscribe. Share these videos with all your friends, family, and all over your social media. God bless. Look forward to speaking with all of you very, very soon.